Tax deductions for small business owners. Title: Maximizing tax deductions for small business owners. Introduction. Running a small business requires careful financial planning and management. One aspect that is crucial for every small business owner is understanding and maximizing tax deductions. Tax deductions can help reduce the taxable income of small business owners, thus minimizing their tax liability. In this article, we will explore various tax deductions that small business owners can take advantage of to optimize their financial position. 1. Home office deduction. For small business owners operating from a home office deduction can be significant. To qualify, the designated space must be used exclusively for business purposes and be the principal place of business. Measure the square footage of the office space and calculate the percentage it represents of the total home area. This percentage is then applied to various expenses, including rent/mortgage interest, utilities, and property tax, to determine the deductible amount. 2. Business vehicle deductions. Small business owners who use a vehicle for business purposes are eligible for vehicle-related deductions. There are two primary methods to calculate these deductions: actual expenses and the standard mileage rate. Actual expenses include fuel, maintenance, insurance, and depreciation, while the standard mileage rate allows for a fixed deduction per mile driven for business purposes. Keep detailed records of business-related mileage to substantiate the deduction taken. 3. Business-related travel expenses. Travel expenses incurred for business purposes can also be deducted. This includes airfare, accommodation, meals, and transportation costs. However, it is essential to note that only expenses directly related to business are deductible. Mixing personal and business expenses can jeopardize the deduction. Maintain detailed records, such as receipts and itineraries, to support and substantiate these deductions during tax filing. 4. Startup and organizational cost deduction. Startup costs incurred before the business commences operations can be deducted in the year the business starts. These costs include market research, advertising, and legal fees. Organizational expenses, such as incorporation fees, can also be claimed. Ensure to document these expenses and consult with a tax professional to ensure compliance with the rules and regulations. 5. Advertising and promotion expenses. Promoting a small business is crucial for growth and sustainability. Fortunately, advertising and promotion expenses are generally fully deductible. This includes online marketing costs, social media advertising, print advertisements, business cards, and website development expenses. Document all expenses and maintain records to support the deductions claimed. 6. Employee compensation. Small business owners are allowed to deduct ordinary and necessary expenses for employee compensation. This includes wages, salaries, bonuses, and benefits such as health insurance and retirement plans. Be sure to abide by all employment laws and maintain adequate payroll records to support these deductions. 7. Insurance premiums. Small business owners can also deduct insurance premiums for various policies necessary to protect their business. These may include general liability insurance, professional liability insurance, property insurance, workers' compensation insurance, and health insurance premiums for employees. Keep all documentation and consult with a tax professional to claim these deductions correctly. 8. Education and training expenses. Expanding knowledge and skills is crucial for business success, and the expenses associated with education and training can be deductible. This includes attending seminars, industry conferences, workshops, and business-related educational courses. Ensure that the training is directly related to your business and improves your skills or expertise. 9. Retirement contributions. Small business owners can take advantage of retirement plans such as SEP IRA, Simple IRA, or Solo 401k to save for retirement while benefiting from tax deductions. Contributions made to these plans are typically tax deductible up to the specified limits. Consult with a financial advisor to determine the most suitable retirement plan for your business and maximize the deductions available. Maximizing tax deductions for small business owners, continued. 10. Depreciation deduction. Small business owners can also take advantage of depreciation deductions for assets used in their business. Depreciation allows business owners to recover the cost of assets and deduct a portion of the asset's value each year. This applies to tangible assets such as machinery, equipment, vehicles, and buildings. It is essential to consult with a tax professional and understand the depreciation methods and recovery periods allowed for each asset. 11. Inventory and cost of goods sold. For businesses that sell physical products, deducting inventory and the cost of goods sold is a significant deduction. By keeping accurate records of inventory purchases and sales, small business owners can deduct the cost of goods sold, including the purchase cost, production costs, and direct labor costs. This deduction helps to reduce taxable income and accurately reflects the business's profitability. 12. Professional services. Small business owners often require professional services such as legal, accounting, and consulting services. These professional fees are deductible business expenses. Whether it's hiring an attorney for legal advice or an accountant to help with bookkeeping and tax preparation, these expenses can be deducted. Keep detailed records of all invoices and payments made for professional services to support the deduction. 13. Software and technology expenses. In the digital age, small businesses heavily rely on software and technology tools to operate efficiently. Expenses related to software purchases, subscriptions, cloud storage, website hosting, and computer equipment can be deducted as business expenses. Maintain records of all software and technology-related expenses, including receipts, invoices, and subscription agreements. 14. Charitable contributions. Small business owners who make donations to qualified charitable organizations are eligible for deductions. Whether it's donating money, products, or services, these contributions can lower taxable income. Ensure that the organization is a qualified, tax-exempt entity and obtain proper documentation and acknowledgments for the donations made. 15. Bad debts. Small business owners who experience unpaid invoices or bad debts can deduct those losses as business expenses. If a customer fails to pay for goods or services, these losses can be claimed as bad debt deductions. Keep records of all attempts to collect the debt and provide supporting documentation to substantiate the deduction. 16. Self-employment taxes. Self-employed individuals are responsible for paying the entire amount of Social Security and Medicare taxes. However, they can deduct the employer's portion of these taxes as a business expense when calculating their adjusted gross income. Keep accurate records of self-employment income and taxes paid to claim this deduction accurately. 17. Repairs and maintenance. Regular repairs and maintenance expenses incurred to keep business assets in good working condition are deductible. This includes expenses for repairing equipment, renovating office space, and maintaining company vehicles. Keep records of all repair and maintenance expenses, including receipts and invoices, to support the deduction.